Good afternoon or good morning, wherever you're joining from. We're really happy that you decided to join us today. Today's In-Course webinar features Robert Jones from Left Brain Professionals, and he will be talking about completing the incurred cost proposal. My name is Liz Brigson, and I'll be your host for today. So let's just go through a couple quick housekeeping items if we want to take a look at that next slide, just as a quick reminder. So today's webinar is a 1-hour webinar. To earn CPE credit for the webinar today, you'll want to respond to the 4 polling questions that we are launching. Once you qualify for credit, your CPE certificate will be available for you to download 1 hour after the conclusion of the event today. If you ever have any questions about CPE or the webinars, you can always contact us at support@incorsa.com. We do seek to make the webinars as interactive as possible and take questions as we go. So you can use the questions pane within the GoToWebinar control panel and just let us know what your experiences have been and also what questions you have related to this topic. I'll take a look out there right now if you want to let us know where you're joining from, or if you've had a chance to join us before. It's always fun to welcome back friends who have been with us in the past. I'd like to also draw your attention to the handout section within GoToWebinar. Within GoToWebinar, we upload those handouts, and so you can access Robert's handouts and his presentation specifically from the handouts section. If you have any questions, just again, use that questions box and I'll be monitoring that live and we'll let you know to make sure that you can hear us, get the presentation handouts and keep rolling. So with that, I think we've covered our housekeeping items. I'd like to introduce Robert Jones and welcome Robert back. This is Robert's 3rd time with us and really awesome to partner with Left Brain Professionals and be able to bring you really awesome education on the topic of government contracts. Robert has a background as a controller, a defense contracts manager, and also an instructor and a speaker. And he really has a phenomenal background to make him a government contracts and accounting expert. So he's the perfect person to join us today to talk about incurred cost proposals. And so with that, Robert, I'd like to turn things over to you. Thank you.
Well, thank you. I appreciate the opportunity. And again, it's been a great platform and looking forward to bringing some more training sessions to the Incorsa group. Yes, so today we're here to talk about the incurred cost proposal. My firm is Left Brain Professionals. Just a couple of housekeeping items for me up front here. The first is we always like to start with a positive share in our presentations. So our quote for you today is, "The pessimist sees difficulty in every opportunity. The optimist sees opportunity in every difficulty," right? So it's always a matter of perspective. And I tell people, step back from every situation and try to look at it differently and see how you might respond differently. Just a couple of very quick slides about who we are and what we do. We are a boutique accounting firm. We serve only government contractors, practice primarily accounting system design, implementation, and audit support. Some of the types of things that we do are the SF 1408 survey, indirect rates, bids and proposals, all the stuff that government contractors deal with when they're selling their products and services to the federal government. Another picture here of me, my colleague Melissa. Unfortunately, she couldn't join us today. She's actually in another training session because she needed to update some of her CPEs. So she's off learning today, just like you guys are learning from me. All right, so let's dive into the learning objectives. We've actually got a lot to cover in an hour, so I'm probably going to be whizzing through some of this stuff. If I've done my job and done it well today, at the end of this session, you should be able to identify the requirements for submitting an incurred cost proposal or an ICP. You'll hear some people refer to it, and you'll see later either an incurred cost submission or an ICS. It's all the same thing, just a little bit of nomenclature difference. You should be able to define the contents of the incurred cost proposal, to locate resources for completing it, and list some of the common mistakes that people run into. So some background, again, as I said a moment ago, the incurred cost proposal or the submission, depending on how you refer to it, DCAA on their website actually refers to it as the Incurred Cost Electronic ICE, which in today's world has an unfortunate nomenclature with the ICE there, but they refer to it as electronic because they have their Excel file out there, and we'll talk a little bit about that later. What is the incurred cost proposal? And I guess one of the questions, one of the polling questions I should have put in here is how many of you are actually doing work with government contractors? Hopefully, since you signed up for this particular webinar, you're doing some work with government contractors, or you already work with a government contractor. But what is the incurred cost proposal? It's really that next bullet there. It's the reconciliation of the actual costs incurred compared to what you've billed over time. So what we're talking about is for contractors who are working on flexibly priced contracts. Those are T&M or time and material contracts, and cost type contracts, such as like a cost plus fixed fee. You put together your budget, you have an interim billing rate, you bill the government based upon that agreed upon billing rate throughout the year. At the end of the year, you reconcile what your actual costs were compared to what you billed the government. And the very last item there, you're identifying whether you over or under billed the government, and you look at that on a contract by contract basis. It is due, your incurred cost proposal is due 6 months after the close of the fiscal year, which I note here as June 30th for many contractors, since many businesses follow the calendar year as their fiscal year. Then June 30th becomes the day when their proposal is due. Keep in mind that it is 6 months after the close of the fiscal year, so if you have a different fiscal year, you'll need to recalculate. DCAA utilizes a risk-based approach to the audits. So what they've done is they look at, is the contractor new to government contracts? Have there been any audit issues in the past when they have been audited? And how many dollars are involved in the incurred cost proposal that they are submitting. So they have kind of their own formula they look at. A lot of your smaller contractors out there, if it's their first time through, they might get an audit just because it's their first or second time through, even if they are small dollars. Usually once DCAA or their cognizant agency has a level of comfort, DCAA in particular will issue a low risk memorandum and a rate agreement letter. And so they will issue those in lieu of performing an audit when it's a low risk. I point this out here because we actually just engaged in the process, I should say, of engaging with a new client as part of one of the opening interviews. We were chatting with them, trying to learn a little bit more. They said they needed help with an upcoming incurred cost proposal, and we said, great, how many audits and stuff you've had in the past? And we uncovered a situation where, because I said, okay, well, do you have your memorandums? And I said, well, have you had an audit? And they're like, no, we haven't had any audits. And I said, okay, so you have your memorandums from DCAA? And they're like, no, we don't have any memorandums from DCAA. And I'm like, okay, well, wait a minute, what's going on? And unfortunately, what we've come to find out is they actually did not even submit the incurred cost proposal, which is yet a deeper problem that we're working through with them. But again, I point this out here. If you're deemed low risk, DCAA should be issuing you two separate documents, one the low risk memorandum and the rate agreement letter, basically stating that they're accepting the rates that you submitted in the incurred cost proposal. And I note here, we talk a lot about DCAA when we talk about government contracts and from the audit perspective, and certainly today when we talk about the incurred cost proposal. However, you or your clients, whatever the case may be, may actually have a different cognizant agency, and that simply means you have a different agency where you're performing most of your work, or where your clients are performing most of their work. And so that could be somebody like DHS or Centers for Medicare and Medicaid Services, something like that. So it might actually be a different agency. Some of those agencies still use DCAA to do some of the audit work. Some of them perform their own audits. All right, so our first poll to see if you've been paying attention in the first couple of slides here. Liz, if you'll kick that off for us, please. So the question is, when is the incurred cost proposal due? 60 days, 90 days, 120, or 180? And it's a little bit of a trick question here. I don't know if you guys caught on to this. So let's see, I'm going to open up that little, see if I can pay attention myself. Unfortunately, I see that some of you got caught up in my trickery here. And does anybody figure out what the trickery is? I said on the previous slide that it's due 6 months. And what is 6 months? 6 months is 180 days. And I bet many of you clicked on that 60 days because you saw the 6 at the beginning and jumped right on it. But just make a note that it is 6 months or 180 days.
All right, well, we'll close that down, and thank you everyone for your responses.
All right, let me get back here to the slides. All right, so our first learning objective is about identifying the requirements. So how do you know if you need to submit an incurred cost proposal? If your contracts include what we refer to as the allowable cost and payment clause, which is FAR 52.216-7, then you need to submit an incurred cost proposal. You will find that clause if you are performing flexibly priced contracts such as T&M or time and material. That also includes labor hour contracts. So basically a labor hour contract is really only the T side of that, right? It's the time. So you can either have a time and material, or you have a labor hour contract. Or if you're performing some type of cost type contract, you're going to find that FAR clause in there. As well, if you are in the SBIR, or I should have put my slash in there and said the STTR program as well. So if you're doing SBIR or STTR grants and you're doing phase 2 or phase 3, you are getting cost reimbursable contracts through those, and so you would have a requirement to submit the incurred cost proposal as well. It's important to note here that the same criteria applies at both the prime and the sub level. So if you are a subcontractor or your clients are a subcontractor and they're performing work on a flexibly priced subcontract and perform in support of a government prime contract, they too must submit an incurred cost proposal. Right, so hopefully the primes are paying attention and that they've incorporated that clause into the subcontract. Hopefully your subcontractor clients are aware of that. They should obviously know that they're performing work on a government prime contract. And again, if it's a flexibly priced contract, the same requirement applies. All right, I think we've got a poll. I got a slide here out of order. So actually, I'm going to ask that we, if you've got that poll queued up, we're going to skip that poll for the moment and come back to it. I'm not sure what happened there.
Sure, we can circle back. Just let us know when you'd like to launch it.
Yeah. All right. So one of the things you're going to need to do is gather documents, right? So if you think about any kind of audit, right, what's one of the first things the auditors do, right? They send you a list of things saying, these are the documents you need to send. Well, you know, as an internal person, or whether you're internal with a government contractor, or maybe you're an external CPA firm, and you're helping your clients through this, some of the documents that you need to gather in order to be able to complete the incurred cost proposal would be financial statements. That does include, you know, while the incurred cost proposal does not look at the balance sheet, you know, we generally always grab the balance sheet when we're talking about financial statements. You definitely need the income statement. Your government contractors should be preparing a statement of indirects. If you don't know what a statement of indirects is, I would ask you to email me or contact me separately and let's talk about that. For non-government contractors, that probably sounds like a very bizarre statement to put together. But again, if you're a government contractor, they should be doing it. And you also obviously want a copy of the trial balance, because it's easy then to take that trial balance, drop it into an Excel template, and then be able to fill out the forms that are necessary. You'll need contract briefs or copies of the contracts in order to complete the contract briefs. Labor details, we'll talk about many of these things in greater detail here in a little bit. Job or project details, so some kind of job status reports. It could be a P&L by job. You know, it depends on what kind of accounting system that you're doing. If they're using QuickBooks, for example, and they're using projects in QuickBooks, then you can have, you know, a project P&L. Some other software may have a similar terminology. If you or your clients are using a software system that was designed for government contractors, such as there's a Dynamics Nav version out there, something like Uninet or Simpac, for example, Deltek, those have actually job status reports in them. Again, the terminology might be slightly different, but what you're looking for, what you need to get out of there are the direct costs, so labor, travel, material, ODCs, and subcontractors that were directly charged to a job or a contract. You need that information by contract. So the easiest way to get it is through some kind of job status report. And then there's some corporate info that you'll need. In particular, what you're going to look for from the corporate side, things like an org chart, and copies of any, you know, if there were any accounting system changes and stuff like that. So I jumped ahead and kind of hit some of these already. Again, the financial statements, primarily the trial balance, income statement, statement of indirects, contract briefs. The other things out of the contract briefs, you need to make sure that you've got them for all contracts that had any activity in the fiscal year in which you are submitting. So for right now, we're in the middle of 2019. If you've got a calendar year, your incurred cost proposal is going to be due June 30th of 2020. If you have a contract, maybe you only even had a little bit of work in the first 2 weeks of January of 2019, you're going to have to report that. So you're going to want to make sure that you have all contracts that had any activity in your fiscal year. The reverse is true. Let's say you had a contract and you only had 1 week of activity the last week of December, right? That's still in 2019. You're going to need that information. If you had any contracts that had that were closed out, you'll need that. That were closed out during the fiscal year, and copies. You'll want invoices for all of those contracts. Because remember what I said in the beginning, what's the whole purpose of the incurred cost proposal? It's to reconcile what you actually incurred in cost and what you billed the government, right? So in order to know what you billed the government, you're going to need copies of invoices for all of these contracts. The labor details that you need, 941s that match the fiscal year. And I'm going to spend a couple of minutes talking about labor here, because I will tell you that of all the schedules and we're going to go through a list of the schedules here in a couple more slides, of all the schedules in the incurred cost proposal, the one that I find is the most difficult to reconcile is the Schedule L for labor. And the reason it usually becomes problematic, well, there are typically two reasons it becomes problematic. Well, three. Okay, I'm going to make it three. I'm changing my mind. All right, so the three reasons it becomes problematic. One is my second bullet here. I can't tell you how many times we've worked with clients and they're charging labor to accounts that do not have labor or some other clear indicator in the title of the account to know that there's actually labor in that account. So one of our recommendations to clients is to always make sure that your GL title for any accounts that have labor actually use the word labor in the description. That way it makes it very easy to identify those accounts that are going to be necessary for this reconciliation at year end. Problem number two, that kind of goes hand in hand with the title of the account, is that oftentimes clients will commingle expenses in the account. Remember, the ideal general ledger should be, we should have homogeneous accounts. That means, right, there's only one type of expense going into an account. And that is never more true than when we're talking about labor. What will happen, a perfect example will be something like training in your overhead pool. Some companies will have a training account, and all of a sudden they'll put the training labor, they'll put the cost of the training class, they'll put the cost of the travel in order for the employee to go to the training, and they'll dump it all into one account, and they'll say, well, it's all training. And I'm like, okay, it's all training related, but you have the cost of the class, you have travel, and you have and you have labor in there, and it's really problematic because they're There are separately issues with the allowability of some travel costs, so having those in a separate GL account is important. But having the labor in a separate account is really important because, and while this sounds really easy, what you have to do on that Schedule L is take the total of your 941s, right, which is where you're reporting all of your taxable wages. So you're going to report all of your wages that you reported to the government, and then you're going to go to the GL and say, okay, show me all the accounts where I charge those, right? And they should add up. And in the ideal world, they should, right? It should be pretty simple and straightforward. But because of those first two things, where again, either clients don't clearly identify the labor accounts or they commingle expenses in there, it becomes crazy. And then my last bullet under that side there is any kind of journal entries. So be very, very careful. Make sure you get a copy of any journal entries that affected the labor accounts, because you're going to need those in order to reconcile. Over to the right side of the screen, we're talking about job and project details. So I already mentioned the job status reports. Again, we're looking for all of the direct costs. I list the invoices again here, just kind of a reminder, you really got to have that invoice information, whether you pull it, depends on how you file it. You know, I've seen some clients that they file a copy of the, they file a copy of all the invoices with the contract itself in the contract file. Sometimes they put it in a job file that's separate. Wherever you have it, you're going to need it. One of the other things that you're going to need is a summary of summary of hours by labor category, if you have any T&M or labor hour contracts, because we have to report not only the direct labor dollars and on the one schedule, but because they're T&M or labor hour, we actually have to have the number of hours that were utilized by labor category. So you're going to be digging into your timesheet program, whatever that is, in order to gather this information. And I'm going to insert here, I should have added a slide about this as a reminder. And next time I'm also going to make it a polling question is, when is the best time to start gathering all this information and pulling it together? And I'm going to tell you the answer. The answer is when you're completing year end. To me, there's absolutely no better time to start gathering this information. Please do not wait until May or June to start gathering it. One, it takes much longer to fill out and reconcile all this information than you may think. The second is, and really potentially more important, is if your fiscal year closes December 31st, and you're working on year-end stuff to get everything to the, to the CPAs in January so you can get taxes done and get the 1099s out and all of that stuff. If you now wait another 4 or 5 months in order to start gathering these information, it's that much harder to go back and pull out this stuff to try to remember what happened. Another 4 months of activity is now in your brain when you're trying to sort through and figure out what was this entry or what was this about. And at year end, you're already doing a lot of this stuff anyway. So what I tell people is, whether it's a physical folder, if you're still doing paper, whether it's a digital folder on your network, one of the best practices is to go ahead and create a folder where when you're doing a lot of year-end reconciliations and gathering stuff, right, you're doing your 940 once at the end of the year, because you got to prepare that 940, and hopefully you're validating that all your 941s, right, add up to your 940 and all that kind of stuff. When you're doing all those reconciliations, throw copies of all that in this other folder and start gathering it then, because it makes it a whole lot easier when you get to June and you're trying to prepare it. For the corporate info, I mentioned org chart, also any kind of organization changes, and that could be anything from changes in the internal structure of the org chart. It could be M&A, could be splitting out, divisions or whatever that might be. And also any key accounting changes, right? If you've changed software, if you've made accounting policy changes, you're changing the way you're recognizing revenue, you're changing the way you're treating some kind of expense. Maybe you change something with depreciation, for example. Any of those kinds of changes, you're going to have to report those as part of the incurred cost proposal. All right, so our second learning objective was about the contents of the incurred cost proposal. So let's talk about what's out here. There are a lot of schedules, which you'll see on the coming screen here. There are what I refer to as 20 primary schedules. There are 7 supplemental schedules. I state here that all are required unless they're not used by the contractor. So I'll give you a prime example. One of the tabs that's in there is for an intermediate cost pool. An intermediate cost pool for some contractors can be facilities, for example. They might actually create a facilities cost pool, capture all of those costs in there and allocate them out over square footage and allocate them to the other final cost pools, such as overhead and G&A. However, many of your smaller contractors don't do that. They simply put their facilities expenses in overhead, for example, and do it all there. And that's fine, that's an acceptable practice. Well, obviously in that case, they don't have an intermediate cost pool, so they would have no need to fill out an intermediate cost pool tab in the incurred cost proposal. But otherwise, I would tell you the schedules that are in there, you're going to need to be able to prepare to fill them out. And as you can see, there's 27 schedules that you're likely, at the very least, at least reviewing to see, is there something we need to put in here? And there are 4 additional schedules, which I recommend that you go ahead and gather that information. It's not required to submit when you submit the original incurred cost proposal, but if you are selected for an audit, you will need to provide the information. All right, so I took the incurred cost proposal and I broke it up in a way that kind of makes sense to me. I will say that if you go through the incurred cost proposal personally, I think the way it flows through from A to O for your primary schedules, left to right, the way they've got it laid out doesn't logically make sense in my head. So I've kind of grouped these in a way that I think makes the most sense. There's the first set over there to the left, which are your indirect expenses, right? So that's one of the big things is the incurred cost proposal is helping you figure out what were your final indirect rates. So you're going to need to enter the details there as you see for your G&A, for your overhead. Notice that Schedule D is the intermediate cost pool that I said if you're not using those, then you won't fill that out. If you have a separate fringe pool, which most people do, we still have a couple of people who include all of that in overhead. Most have a separate fringe pool, so you'd fill that out. And then the Schedule E is what are the allocation bases for each of those pools up above. So for example, Schedules B, C, D, and fringe are the pool part, and then Schedule E is the base, and that's going to then show you how, and it's going to give you your calculations, which all then flow back to Schedule A, which gives you the summary of that information. Number 2 there that I have, and you notice I said if proposed. So if you're dealing with the facilities capital cost of money, quick description of what that is. The government does not allow interest expense to be charged back on government contracts. So it's not an allowable expense that you can include in your overhead or G&A rates. And there's a whole other conversation about that. And actually, Liz and I were chatting. Probably the next seminar that I'm going to do for the in-course group is going to be on unallowable costs, and we'll get you a date for that in October when we can get that nailed down. So I'll save the details for then and come back and learn. But suffice to say, the government does not allow interest expense in there, but they do allow this capital cost of money, which I refer to, these are Robert's words, okay? What I refer to as kind of a quasi-interest. So what they do is they recognize that companies tie up money, right, in order to either buy or lease equipment, to buy buildings, to do, construction work, other kinds of things. So there is a cost of money, right? So what they do is they allow you to claim this cost of money. There's an important thing. If you do not propose cost of money in the original proposal, not this proposal for the incurred cost, but in the original proposal for the contract, if you did not propose cost of money on that contract, you cannot claim cost of money at the end of the year as part of your incurred cost proposal. So if you are to this point now and you didn't propose it, you're in trouble, you can't claim it. Okay, so make a note of that and make sure you guys get that in your proposal process going forward. The other little trick to this, there's kind of 2 little tricks that go hand in hand. Of course, the government is always going to have, they got to make it a little difficult for you. The first part of the difficulty is that the calculation is on the average net book value. And so for my accounting people out there, right, what is net book value, right? That's the cost minus depreciation. So what's happening over time, the net book value is decreasing. So even though you may have put money into a building or some other asset, the net book value over time is decreasing. And so the amount that you can recover through this cost of money is decreasing over time. Even though you may have the cash physically tied up, right? You still don't have the cash in your hand. It's still tied up. You can only use net book value. The other is that you have to use the treasury rate, which we all know kind of goes up and down. Trump's out there screaming right now that he'd like for people to lower it. So as that rate fluctuates, then the amount that you can charge back fluctuates with it. Number 3 here, I have the get the labor correct, and I pulled it out by itself. As I said in the previous slide, you know, labor is one that we find is often most difficult. Don't get me wrong, some of the other slots, some of the other schedules have their own difficulties, but really reconciling labor is sometimes where I've spent my most time on some of these. And labor is really important, right? Because labor is one of your primary costs. And when we're talking about the direct costs, right, you got to have that correct. And if you can't support what you're claiming, then you're going to be in trouble. And then I've grouped here a bunch of stuff that have to deal with the projects, right? So I told you, you know, there's a lot of direct cost information by project or by contract. So we got to reconcile what's in the GL with what we claimed. We have to reconcile what's in the GL with also the job cost ledger. That simply means all of the parts, you know, the sum of all of the parts equals the total, right? So we go in and validate that. There's a summary in there. Then we actually have to put in details by contract. And then the government wants to see what their participation was in all of your indirect expense pools based upon the direct costs that are associated with their contracts. And then the last piece that I have there is the goal, right? It's the cumulative direct and indirect costs claimed and billed. That's where you're figuring out, what did we bill the government through the year? What were our actual costs? And did we under or overbill the government? Now you're probably looking at this slide saying that's not 27 schedules, and you are correct, we have more. All right, so there's some supporting information. There's so if you've issued any subcontracts out under you have to report that information. And again, the intent here is we got an hour. There's a lot of information to cover. The intent was not to go in a lot of detail, but really to just make you aware of this stuff, show you where this stuff is, and try to help you make general sense of it. That Schedule K, remember I mentioned a couple of slides back, you're going to need that summary of hours and amounts on T&M and labor hour contracts. It's going to go right there on Schedule K. That description of accounting and organizational changes on your Schedule M. The contract closing information. Remember that. I'm going to go back up a couple of slides here. Hopefully don't get people messed up. Remember right here, job project, right? So we need, or on the contracts, right? Closeout documents, invoices, right? Remember me saying that? Look here on the corporate info. Remember under the gather documents, I said you're going to need those accounting changes, org chart, that kind of stuff. So now when I go back to where we were in the slides, you can see that Schedule J, K, M, O, all of that information is over there. Note the supplemental O. So there's a Schedule O and a supplemental O. That is not a typo. That is correct. That's the way they listed in there. So don't get too confused with the supplemental O or the contract briefs that you'll put in. The grouping 7 that I have here is a bunch of comparative analysis, and I will tell you that DCAA or your cognizant agency does look at this. And so what is this? They're looking at what are your rates over time. So they're going to compare last year's rates to this year's rates. And if there are any significant differences, even if they don't do an audit, and we're dealing with this on a client right now, they're low risk, they're not being audited, but somebody still looks at it to kind of do a sanity check, right? So, and that's part of their, that's part of their assessment for the low risk, but even still, right, they're going to look at it and say, okay, does this information make sense that you've submitted? And in fact, with this particular client, what's happened, it was really good for them. They had some growth last year, right, additional revenue. So what does that mean? It means some of their expense categories went up in relation to that. Not all of their expense categories, but a few did. And so if you look at the percentage change on a few line items, there were some really explosive expenses in a couple of those areas. And so they've come back, now the auditors have come back and said, hey, can you explain what this is? and the client's not in trouble and there's nothing wrong, the calculations are correct and the information is correct. But obviously, if you have, say, a 20% increase in revenue, right, some of your expenses are going to be a 20% increase in expenses or potentially more in order to support those type of growth. Number 8 there, I call it my really important signature. Somebody really important in your organization or your client's organization is signing off on this. Once you've gathered all the information, completed all of the tabs, somebody is putting their signature to this, saying, you know, to the best of my knowledge, these things are accurate and correct, right? Very important. And you do have to have that signature when you send in your final submission. Number 9 there are remember I said there were 4 schedules that if you are audited, or some additional information that they want. So there's some additional comparative analysis stuff that they're looking for. They will compare the federal and state income tax returns. Why might they do that? Well, they want to see, what did you claim to the IRS for expenses and what are you claiming to the government for charging back, right? And they're going to try to see, are you trying to charge the government more, right, in your rates back to them than what you claimed as deductions on the tax return? So that's the reason that they're looking for that. List of your ACOs, and so that's your administrative contracting officer or your purchasing contracting officer, ACO and PCO. So they want that information because they might need to go back to them. They also need executive compensation information for top 5 executives. It's important to note you will provide that on a separate tab, but there's some additional details that they will want at the time of audit. All right, so I think this is where the room polls got messed up. Hopefully, Liz, you can kick off the one that says, what information did you need? So please don't pay attention to I'm going to go back and hide this.
Sure, so we can launch the question about the following documents. Is that the one that you're, no? Perfect, okay.
Yes.
So hearkening back to the previous section, which of the following documents are not required when preparing the ICP? So go ahead and let the audience respond to that. And in the meantime, we have some good audience questions. I think we'll probably, hopefully have time for Q&A at the end, but
yeah.
So we'll hold on that because it looks like we're about to close this poll down, but do want to make sure that we bring a little bit of time to cover questions. Thank you for that. All right, well, we're going to go ahead and close this.
Yeah, and it looks like 70% of you got it correct, so I think people were paying attention. I did not mention W-2 statements. I did mention 941s. The trial balance is obviously going to be key, and those contract briefs. You're absolutely going to have those other 3 items in order to adequately complete the schedule. All right, so where can you locate some resources? And the one thing that I will tell you, I do have a slide near the end of this. Not only does Liz distribute the presentation to you afterwards in a follow-up email, she will have a link in there to our website. There's a link that I'll show you on a slide here near the end of the presentation. You can go to our website. On the website, you'll be able to download the presentation. More importantly, we have a list of resources, and we have direct links to all the stuff that we've talked about and more. Obviously, there's a lot of information that goes into putting on a webinar, and while we can't talk about them all in detail in 60 minutes, I provide links to all of that information so it's simple and easy for you to find. The DCAA ICE model, remember I say they refer to theirs as the Incurred Cost Electronic. My big caution that I put in yellow here, please, I'm not a fan of their template. If you want a template, contact me. We have a template that we could share with you that we've cleaned up. One, theirs looks atrocious, my personal opinion. If some of you have seen it, you might be chuckling with me right now. It uses macros, which in and of themselves are not necessarily problematic, but there are some problems in their macros in that file. I will tell you that the file has a lot of hidden rows and columns, which I understand why people use it, but it's really the third item there. If the first 2 don't turn you off, I will tell you that I have found various formula errors. While they have designed the tool to supposedly be somewhat intuitive and easy for people to copy and paste and use VLOOKUPs, I will tell you it really doesn't work as well as they say. If you do download theirs and you use it, please proceed with caution, my personal advice. DCAA, again, whether a DCAA is whether they are your cognizant agency or not, it's certainly a great resource for all of this information. They do have an adequacy checklist. Please download and use the checklist when you submit it. One of the important things is that there's a statute of limitations on how far back DCAA can go in order to audit. The magic number is 7 years from the date of an adequate submission. And what some people have been caught up in is that they have submitted their proposal, submitted it on time. The statute of limitations passed or was near passing because DCA at one point, and with some contractors still, they still are severely delayed with some contractors, but at one point they were severely backlogged with many contractors. They came back later and said, oh, well, this was inadequate, so you need to submit this additional information. And so when the contractor submitted the additional information, DCAA reset the clock for the statute of limitations, okay? Make sure that you fill out that checklist, make sure everything is there the first time you send it through. On their website, you can also get a copy of the audit program. You can get a copy of all their audit programs that are out there. You can get a copy of their audit guidance memos or their MRDs. So those are memorandums to the field staff. Very helpful information. It gives you insight into some of their interpretations. They also provide updates from time to time in how they're performing some of the audits. So make sure you check those MRDs on a regular basis. I won't say that they don't make many changes. I mean, in any given year, they might issue a half a dozen MRDs, but you'll see that there are plenty out there from previous years, and they are all still relevant documents. Some of the common mistakes, not submitting. I mentioned that a little bit ago about one of our clients right now, that they got into a situation, and I don't know the details yet. They are a new client that we're trying to engage with, but something they didn't get submitted. I don't know if that was an oversight. I don't know if it was a change in personnel or what happened. If you don't know right now, if you're sitting on this webinar and you're saying, I don't know whether we need to submit, you need to go back in your contracts and look for that clause, the FAR 52.216-7, the allowable cost and payment. I can tell you that if you are performing work on a T&M, time and material, or a labor hour, or some type of cost type contract, such as a cost plus fixed fee, if you're doing work on an SBIR or STTR grant, phase 2 or phase 3, you have a requirement to submit the incurred cost proposal. And remember what I also said in the beginning is that this applies to subcontractors. So if you or your clients are only a subcontractor and they are not doing any prime work, they still will have the same requirement if they are performing on one of those flexibly priced contracts, okay? Submitting an inadequate proposal. I mentioned here, right, the clock regarding the statute of limitations starts again. It starts when you submit an adequate proposal, and you want to be careful that you know, so for example, if you just submitted for June 30th, 2019 for your 2018 fiscal year, and let's say whether it's DCAA or your cognizant agency, let's say they're a year behind and they come to you June 30th of 2020 and say, oh, we're just now getting to your 2018 proposal. We found some errors in it. This is an inadequate proposal. You need to resubmit with the additional info. The clock starts ticking when you submit the new documents next year, okay? Not submitting on time is obviously a problem. However, extensions are possible. You know, and I would say that if you're asking for this past year, we actually had to ask for a few days with one of our clients. We ran into some specific issues with them. Their agency was very understanding, very easy to work with, and it was not a big deal. You know, I would say if you're getting, you know, and try not to, obviously on June 30th, you don't want to ask for the extension. We noticed about a week and a half in advance that, it was around that June 20th timeframe for us that even though we were working, we looked at it and said it's not likely that this is going to be done in time, and so we contacted them. So you can get an extension. Don't be afraid to ask. That commingling of labor expenses that I mentioned before, right? Very problematic in trying to reconcile Schedule L. You'll pull your hair out, folks. And if you could see a picture, well, if you saw my picture, you saw I don't have much hair, and that's why. It's all because of these incurred cost proposals. Segregating your unallowable costs. Again, when we talk about unallowable costs in a future webinar, I'll go into some details with that. However you do that in your system, hopefully you have some 9 series accounts in your GL that you use to segregate the unallowable costs. If you segregate them at least in a separate GL account, regardless of the numbering series, is good. You just want to make sure that you do show, and you'll make notes on the incurred cost proposal. This is what's on the GL. This is what was excluded because these are unallowable costs. One of the things that if you do go through an audit, okay, if you hear nothing else from me today, if you go through an incurred cost audit, I can assure you with everything that I know and have, they're going to be looking for unallowable costs, right? One of the things they're looking for in the whole thing with the incurred costs is to make sure the rates you're charging back to the government are accurate. And if you have unallowable costs in there, that's going to be problematic. So they're definitely going to look for that. Check your footing and cross-footing, folks. Again, another reminder here, if you're using the DCAA file, I have found various errors in it. Please be very careful whether you're using their file, whether you're using your own file. Always have somebody else come through afterwards and double check, because there are links among the various tabs or the schedules in Excel. Make sure that the link is pointing to the right field, because on many of the schedules you'll have to insert rows because depending on how many GL accounts you have to report, you're probably going to be inserting rows on some of these. If you insert the row at the wrong place, then a field gets messed up, which is why they have, remember I mentioned some of those hidden rows and columns. They've tried to build it, but again, there are just some problems in there. So always double check those references are working between and among the tabs. And Liz, I know we've got 2 other polls. I guess we'll end up doing them back to back here. I apologize, I'm not sure what I did. But if you want to kick off the third one.
That sounds good. So the third question is, you must complete all tabs and schedules in the incurred cost workbook. So we'll leave that open. And it sounds like you have a template that you're willing to share that kind of simulates but streamlines a lot of what that ICE template is.
Yeah, so we took theirs and cleaned it up. In fact, I'm trying to work on, I like in theory what they've done. They've tried to make it so that you can plop in information and the totals flow to the proper places, but we're working on a simplified, better approach that does not use macros. Macros can be problematic for people who aren't used to using them. They can also be problematic in certain environments. Many companies and computers are set to disable those kinds of things because hackers can do bad things with macros, so we just tend to shy away from them. But regardless, we have a cleaned up template. Be happy to share if you want to contact me directly. I'll have my contact information up on the screen here in a couple of moments. And Liz, if you want to go ahead with a couple of questions, we'll do those, and then we'll do the other polling question near the very end of our hour here.
That sounds good. So on this third polling question, we did close that down. We have the results on the screen. It's a true-false question, and the audience is almost split. So what's the right answer?
So it says you must complete all schedules, and the answer is false. Remember I said that if you're not, for example, if you don't have an intermediate cost pool, you would not complete Schedule D because there's nothing for you to complete. So in theory, yes, you should complete them all, but there may be some that you just don't need to complete. All right, so let's hit some of those Q&A that you've got there.
All right, great. So the first question is related to the subcontractor prime contractor relationship. So if a subcontractor is required to submit an ICP, do they submit to the government or to the prime contractor?
To the government.
Okay.
So they're going to have to figure out who their cognizant agency is. Again, it might be DCAA, it might be a different agency.
Very good. And then what about, this is a new question, we talked about those cost pools, and the question is, if a company is small enough, are there ever any scenarios where they might put G&A under overhead, or what are some pros and cons with thinking about that?
So one, I would refer people back. So we did a webinar recently on those cost pool structures, calculating indirect rates was the title of it, I believe, where we talk about the cost pool structures. You really should have a separate overhead and G&A. And I'll suffice to say that overhead are those expenses that are in support of clients. So I say for client or product support. G&A are the expenses that are for operating the business as a whole, and the base that's used to allocate those are different. Your base of overhead is typically direct labor, can be direct labor plus fringe, can be materials in some situations. There are some different allocation methods that are allowable. Again, we cover those in the other presentation. When we talk about G&A, because those expenses are for the business as a whole, those expenses are allocated differently. And your two allowable methods there are the total cost input, or TCI, and a value added. And so because the base is different, you really do need to have two separate cost pools.
Okay, very good. And then our last question that we'll take is about grants. So we've talked a lot about the cost proposals in context with DCAA and some other organizations. What considerations would we think about for grants as opposed to actually being a government contractor and charging the government back for those costs?
So there are some on the grant side, there are some slight differences in some of the administration. I would say for the most part, they're pretty much in line. As far as where you submitted, again, you're going to be dealing with I would say that you need to contact your contracting officer or grants officer in that situation and determine where they need you to submit, because you may still be submitting to DCA or another agency. It gets a little complicated because a lot of contractors out there do work across agencies, which is why we use the term cognizant agency. For example, you might have a contractor who does work for DoD and CMS and NASA and VA, or various other, or even some other civilian agencies such as Department of Energy. Right, so depending on the product or service that they sell, they might be supporting many agencies. So your cognizant agency is where you have done the most business, right? So you could have somebody who does a lot of work with DOE, Department of Energy, but they do a little bit of work with, Department of Transportation and maybe Defense and somebody else. Well, they would submit theirs to DOE because that's their cognizant agency. And the reverse would be true for somebody who does a bunch of work for DoD, for example, for defense, but maybe only does a little bit of work for some of the others. And I would say the same is true. We have clients who do contract work and grant work. You could have a client that does a bunch of grant work and maybe only a little bit of regular contract work. So it really is it's a client by client assessment to figure out where they need to submit those.
Very good. Thank you very much. Are we ready for that final polling question?
Yeah, I'm ready if you are.
All right, we'll get that launched. And the question is, how many incurred cost proposal submissions have you completed? And Robert, while the audience is responding to this, do you want to tell us a little bit about the landing page that you created and what's available for resources out there?
Yeah, so I'm going to go ahead and advance the slide so they can see it. If you go to leftbrainpro.com, /Incorsa-ICP-19, and Liz is going to share this with all of you in a follow-up email. If you go out there to our website and click one, you'll get a copy of the presentation that you can either flip through online or download. Off to the right, you will see all of the resources and many more that we talked about. So for example, the DCAA ICE model, I've got a direct link for it. Those MRDs, the audit guidance memos, I got direct links to the top level page where you can see all of the MRDs, but I also have links to some specific MRDs that relate to the incurred cost proposal, and again, some other incurred cost related information out there for you. So we just try to make it easy that if you want to follow up and figure out where we got our info or what you can use for yourself, all the links are readily available.
Very good. Thank you. And I did close that poll question down. Should we go on to our last slide and we can close with a few housekeeping items? Thank you everyone for your questions. Robert, this looks like how the audience can get a hold of you.
Yes. You can always go to our website. You can email me at robert@leftbrainpro.com. You can follow us on LinkedIn, Twitter, and Facebook.
Excellent. Where are you most active?
Well, we try to put up some regular blog posts on our website. We do advertise all of those across all the platforms as well. And so if you have previously followed us, for example, you would see that we talked about today's webinar on all of those venues.
Excellent. Very good. Thank you. And as we get toward the end, to the top of the hour, we will just run through our housekeeping items again to remind you that if you are able to answer to at least 3 of the 4 polling questions, you'll be able to download your CPE certificate from your Incurred dashboard. You'll also be able to access the recording of the program today, as well as the handout. So if you'd like to refer to the handouts in the future, then we have those available for you as well. You'll receive an email about an hour after the conclusion of the webinar today, and it will include that link to the landing page that Robert had mentioned. So we encourage you to check it out. I was looking at it earlier. There's tons of resources out there, and there's also a link for you to schedule time with Robert or Melissa. So just a great way to get out, see their calendar, see what might line up for you, and just continue the conversation. Robert, I know that you said that you're looking forward to presenting on allowable costs. So we'll be working on that and looking for a date at the end of October. So I would encourage our audience to go to Incurred.com to keep your eye out for that next presentation on allowable costs. With that, the last thing I'll mention is that there will be a short course survey once you close GoToWebinar, and we'd love your feedback. So if you could just take a few quick moments to respond to that, we would really appreciate it. With that, Robert, thank you again for an excellent presentation. Thank you everyone for joining us. Hope you have a great rest of the day and hope that you can join us again soon.
Thank you.